So hi everyone, welcome to Adesal Forex. This is my overview on EURUSD and why I think it's a drop, okay, unless structure says otherwise. Remember, always adapt and react to the market. So this is a weekly time frame. You can clearly see the market went from a higher high here to a lower low, and then came to form a lower high, formed a low because this is not lower than this, formed a low, and then came up again, formed a lower high, and has continued to form a lower low. Now it's in the process of forming a lower low. So, right. So, let's analyze this based on the weekly, and then we'll go down to the daily. Then from there, you'll be able to extrapolate from this video your next steps if you are trading EURUSD. Okay. So this is a Fibonacci analysis based on this drop and the retest. So this drop, the retest came to 70.8. I know some of you might not be using 70.8, but I love using 70.8 as it is the middle point between 61 and 78, because at times you'll find that the market is just in the middle. So I love using this point. Okay. So the take profit for 70.8 is usually negative 27. Okay, just like 78. So having seen this, that the market reversed at 70.8, I anticipate that the market drop can come all the way down to negative 27, where I've drawn a rectangle. And then if you look at it from the view of from the structure point of view, you find that this is an area of a possible retest, right? This area over here. It's an area for a possible retest. Let's set this one here. So that is confluence for me, right? And then because we have already analyzed this and we've seen this is negative 27, now I can go ahead and delete this video. Delete this Fibonacci and move towards analyzing this one, that one over there. If you move towards analyzing this drop, once again it's a 70 level, 70.8. And what do you know? It has already come down to negative 27. If you remember, I think, was it last week I told you the market had 100 plus people move downwards there. So this move already has already gotten to negative 27. All right. Okay, we delete this and then put another one from here to there. Where is it? From there to there. Okay, 38, and then the market fell to negative 27 and all the way down to negative 61. Okay, so the reason why I was telling you the market was going to come all the way here is because of this Fibonacci, the previous Fibonacci that we had. That is why it was a sure bet, if I can use that term, the market was going to drop over 100 pips to negative 27. Okay, because it has clearly gotten to negative 27, you can expect a pullback. Okay, we can expect a pullback, possible zone for pullbacks. Just a minute. You can expect a pullback from here to here, and then the market continues going down to where I anticipate it to get to. Right, that is my idea. So we'll move to the daily time frame to see if it correlates. Okay, once again on the daily, I will come and put my Fibonacci from this point, from the high to the low, this low over here. Okay, this low over here. But remember, ideally, it's not good to put a Fibonacci on a running, on a candlestick that is still running. Okay, so this is adjustable after the close of day today, right? So where I expect the market to come, it can. Yeah, where is it? This one. There is this point over here, again 70.8, And then there is this point over here, 50 level, and you also have 38.20. All those, they are levels that the market can come to and possibly reverse. Okay. Having been that already the market has taken out the take profit, the weekly take profit. Mind you, this take profit is also in line with this daily. It's also in line with this daily over here. That one. What do you notice? The market came from the lower low, reversed, retraced to a negative 61. And what is our take profit when the market retraces to 61? Comes all the way to negative 61. You see, comes all the way to negative 61. And for EURUSD, another tidbit is whenever the market comes all the way down to negative 61, expect a massive pullback. Expect a massive pullback, all right? And that is why I'm telling you, yes, the market is bearish, yes, understandably. However, it is going to pull back. That is what the market does. It's going to pull back, give you an opportunity to enter the sale like this one. You remember in the previous video, the candlesticks video, I told you if you ever see this candle, I called it an 82. If you ever see this candle, just exit. If you are buying here, exit and start looking for sales. Okay, so that is what we're going to be waiting for. Either at let me put a relevant fib. We're going to be waiting for this candle to form, and that is it's going to assure you that indeed. So if it forms such a candle, M82, it's going to assure you now that the market is pulling down, it's going to start pulling down. And like this candle over here and this candle over here, I know most people had sold at this point, but what happened is the market continued going up. So you want to be certain that the market will start going down. Okay. And another thing to be certain is to go down to now to the lower time frame. I prefer either M15 or H1, and then you look for a breakout structure. Okay. So for instance, so this is what I'm going to do. I'm going to highlight that candle and then go back to 15 minutes. Go back to the 15 minutes. This is how the 15-minute looked like when that candle was being formed. Okay. What happened? The market printed a higher high, printed a lower low, and then came to a retest over here. So you would have entered based on this 1, 2, 3 formation. If you're in Adesal, you know what that means. You'd have entered based on this, and you would have also entered based on this would have been my ideal entry position, this one over here, because I'm expecting a pullback, a downward pullback. Again, if you had not entered here, you'd have entered, trying to see this one here, due to this consolidation over here, and then there's this candle with a long wick. I would have entered also here, and there's also another one here just before the news. What happened? This one dropped. The market dropped. I would have waited for it here at this point over here when it comes back to retest that area. So the market will give you opportunities to not jump in, wait for confirmation, and then proceed with the market. Remember, trading with the trend is better because that whole move is came to around 250 something pips. That drop down based on that daily M82 came to close to 200 pips, if I'm not even close, over 200 pips. Because if you measure this, 250 pips, just based on this. All right. So wait for it. The move up, the opposite trending, is it called opposite trend? Yeah. Counter trending, yes, that is the word I'm looking for. Counter trending will give you money, yes, will give you pips, yes, but to what point? It can always reverse on you. Okay, so that is my analysis for Euro USD, and I hope I've helped you. Bye.